Talk to me about the lending environment that you see right now.
Yeah, actually, it's been incredibly robust. For us, we at BOK Financial, we had our highest loan growth quarter in the history of the bank in the second quarter, $665 million. We saw that building kind of throughout the first part of the year. So I think the fact that business optimism is higher, and I think the fact that we've also removed the uncertainty around healthcare and then tax reform has really improved the CapEx outlook for a lot of our commercial and industrial clients.
So are you mostly lending to large, small, or medium? Because it seemed like what Dwight was saying is that the medium-sized market still needs that private equity money, whereas the larger firms can get money from banks. Who do you lend to?
You know, for us, our sweet spot are really the middle market, clients that are in that $500 million or less in annual revenue, and their appetite for bank debt really ebbs and flows with their capital expenditures and their growth plans. Private equity being more of a permanent part of their financing landscape. So for us, as we're seeing expansion among our clients, bank debt is now beginning to fund up, and we've seen that over the last 3 quarters.
What about expectations going forward? I mean, you sit in Tulsa, so you're very close to any potential trade battles that would happen between the U.S. and China. Are you hearing companies wanting to pull back, starting to think about it? What do you hear?
You know, the biggest dialogue within our footprint really is in Texas, and there's a lot of concern around NAFTA. You know, the state of Texas is a huge exporter to both Mexico and Canada. It would impact transportation, logistics, warehousing, obviously some of the oil and gas industry. So I'd say there's a growing level of concern about trade constraint. But at this point, it's not really translated into a reduction in capital expenditures, at least from where we sit.
How much competition do you feel in the lending space? Do you have to lower your standards, for example, or your covenants in order to get the business?
No, that's not something we would ever do. We're 100 years in the business, and we're very disciplined from a credit perspective. We probably see more pressure around pricing than we do structure because we simply won't modify structure. So it's an intense and competitive environment. I think banks have had a lot of pent-up opportunity to lend. Their loans-to-deposit ratios are historically low relative to kind of pre-recession. So the competition is strong and fierce. For us, as a middle market lender, we're very focused on relationships and all the ancillary services and benefits we can bring to clients as well. So that's really our sweet spot, and that's why we're seeing the growth that we are.
What kind of sectors are you seeing the most activity right now, and what do you expect that to be in the next 18 months?
Well, I think, you know, for us, a significant part of our footprint, Oklahoma, Texas, and Colorado, are energy-based. We're an energy lender. It's a $3 billion portfolio for us. It's one of the largest portfolios in the bank, and as that sector has recovered and is increasing activity now at a $70 per barrel price, that's certainly a growth area for us, and we would expect that to continue. Healthcare lending is an important vertical for us at BOK Financial as well. And we see that expanding over the next 18 to 24 months also. Commercial and industrial, kind of bread and butter companies in the manufacturing sector and service sector are those that we're seeing maybe the most growth plans that are rolling out, and we would expect that to fund up as well. So I think all 3 of those areas have momentum today, and we've seen that carry over into the third quarter.
Are you going to have to hire more people, pay people more wages? That's sort of on the loan side. What about your actual business structure side?
Yeah, we are always adding talent. That's important for us. The competition for strong lending officers, those with good relationships, has always been competitive. I'd say it's probably at a higher level today as all banks are seeking an opportunity for growth. You know, our sweet spot is that we're much more than just a lender. We bring a lot of ancillary services in. Almost half of our revenue comes from fee-based businesses. So if you're a relationship manager for BOK Financial, you've got a much stronger slate of opportunities to serve your client than those that are just focused on the lending side.